this being the last session, I've already been told that this is a farewell session, and he have already given me the momentum before I could utter one word on NCLT, which is self-explanatory. In the era of when we talk about things, and I always keep on reminding myself since school days and college days, and we have been time and again saying theory of learn, unlearn, relearn. Learn, unlearn, and relearn. Change is the only constant in life. You had High Court. Then on the midnight of 8th November, what you have is old is new, old is no longer valid, new has to come into play. And in this journey for some 70 years of earning and for some 70 years of learning were both forced to be disregarded in one stroke. Post demonetization or demonetization, in the era of digitization, I am sure all of us are now trying to learn how to pay management consultancy fee, how to pay capitation fee, how to pay political donations, how to pay facilitation fee, and go on with the life, which is going to be a very difficult task to work out under the current regime. I am sure that is the intent of the current regime of the government, that the processes and procedures should be world class, and standardization of even the legal practice to an extent should actually be encouraged. Therefore, the theme and the buzzword seems to be transparency, disclosure, governance, and you see over and over these synonyms, these acronyms, everything is repeatedly being announced by the government to digitize, reduce man-to-man contact, and have a system which is a process-driven system throughout, so that there are no hurdles in restructuring or running of the businesses. Now, companies and economies world over, they always go on and on doing restructuring of economies and also the businesses which they are running. Sometimes it works, sometimes it doesn't work in favor of the businessmen or the governments. In India, we started, I remember, post 80s, 85, you had these corporate raiders by the name of Mr. Swaraj Paul. Then you have Manu Chabaya. Then you had R.P. Goenka Group. And you see the history of M&A in India. There were no laws. It was all free batting and hostile takeovers. So you had the first takeover bid by Dr. Swaraj Paul on escorts and DCA. It was a failed bid because we were in the license Raj and there were too many restrictions under FERA, and LIC escorts filed the complaint before the Bombay High Court, and there is a celebrated judgment of 1926 escorts versus LIC under FERA that the foreigner cannot come into India and acquire the companies. Then we had 1991 liberalization. Fortunately, I am part of that regime. I started in 1991 and I saw the new industrial policy transition from FERA to FEMA. Then you had the mother of all mergers which took place, Tomco being acquired by Hindustan Lever in 1992 after the MRTP amendments were carried out. Then you have spate of mergers coming up after the Hindustan Lever merger. Hindustan Lever merger was agitated and litigated across. It was being opposed in the High Court, it was being opposed in Consumer Forum, MRTP Commission, everywhere it was being opposed. And it was a landmark judgment. It's a mother of mergers, landmark judgment, and fortunate to be being privy to that and working on that assignment. That's how the valuation norms in that were settled first time, and we still follow the guidelines of Hindustan Lever Tata Oil Mills merger. So it set too many propositions in that Supreme Court judgment. Then I must give credit to the Bombay High Court. Like while we start on NCLT, I'm just giving you a perspective so that how NCLT is formed and why it is formed, we'll have a proper understanding of NCLT. So Bombay High Court needs to be given credit because the mergers and amalgamations, I think, all over India have to collectively put in there. It is Bombay High Court which has settled propositions after propositions. It was the time between 91 to 94 was an rather emerging time and evolutionary. So the law was not settled. Indirect taxation, there were too many issues on excise, service tax, VAT. They were not there at times, and also sales tax in those days, sales tax on going concern basis. All those issues were there, and transaction advisors used to approach law firms and councils to take opinions as to how to best structure and add value to the transaction by saving tax or by planning. Those days, between 91 to 96, there were too many fluid issues which were not settled by the courts. But Bombay High Court did an excellent work in those days, and till today, I mean, before we will have a final transfer of proceedings notification given by the Bombay High Court to the NCLT of the pending proceedings. Again, a landmark judgment of PMP Auto came in 1994, which dealt with what is known as single window clearance. This concept was not known to anybody. Everybody used to say under a scheme of arrangement, merger, amalgamation, demerger, you cannot do certain things. However, Bombay High Court ruled out that in 391, erstwhile 391 of the Companies Act 1956 is a complete code in itself. And anything and everything which was not otherwise prohibited was permissible to be incorporated in a scheme of arrangement. Then came the judgment in 1998 of Mir Mafathlal Industries. Supreme Court again settled principles of mergers and amalgamation in a landmark judgment that contours of a valid merger, if certain things were satisfied by the petitioners, then court had no jurisdiction to countermand or overrule the same. Court only exercised the supervisory jurisdiction over the arrangement, which is basically in the nature of a contract between the parties, blessed by the board of directors, blessed by the shareholders, creditors, and thereafter by the regulatory authorities, and thereafter by the court. So that's how Mir Mafathlal judgment, which is quoted, and no High Court has ever has dared to go against Supreme Court's diktat of Mir Mafatlal's principles in a merger case. Then you saw a regime of inorganic mergers happening in Piramal Group. They were the largest group which started acquiring formulations business, pharma business from various companies, multinational companies, and trying to consolidate their growth and the business over a period of time. Then came year 2000, in which there was this landmark amendment to the Income Tax Act in the form of 219AA. Demergers were allowed as part of restructuring, and then you saw the spate of demergers happening across from 2000 onwards till 2008-9 by various companies. Of course, we had the benefit of, while I say that my good friend during those days and till today, NFRIT used to be the king of valuation, and thereafter RSM became the king of tax schemes, which were blessed by councils across and was proposed to the High Court, and High Court willingly sort of agreed and accepted and passed most of the schemes which were really innovative in the nature on tax angle and tax planning, plus indirect taxation and stamp duty, all. After that, then came 2005. Supreme Court again was burdened with State of Maharashtra versus Hindustan Lever, stamp duty judgment. Now, in 1992-93 until 2003, 10 years, there was no clarity. There was no clarity. Sorry, what is wrong? So, from 93 to 2003, there was no clarity on whether or not stamp duty is payable on a scheme of amalgamation order, and whether or not in case of a demerger it was possible to pay the stamp duty. So structuring was required. Obviously, value driver, value creation for a client would be to how to save tax and how to save costs and move forward with the restructuring, which is most efficient restructuring. But Supreme Court held that scheme of amalgamation or an order passed under the scheme of amalgamation is nothing but an instrument of transfer, and therefore stamp duty is payable, and that's how the law is now settled on stamp duty, that stamp duty is payable even on mergers, demergers, or any kind of a conveyance which takes place through the route of High Court. Then we saw Sterlite case. Before that, we had this issue of Reliance Petrochemicals, where the overall threshold of stamp duty as to how much stamp duty the state government can charge in a scheme of amalgamation. Reliance challenged this. They had a Gujarat company merging into a Bombay company. They produced a court order claiming that the stamp duty was already paid. There was no shortfall, and therefore they have complied with it. But then, with the interference of government, state of Maharashtra came out with a notification that the maximum amount of stamp duty which is payable in case of a scheme of amalgamation, merger, demerger is 25 crore rupees only. You cannot, even if the property is 300 crores, 25 crore is the maximum cap on payment of stamp duty in Maharashtra. Then came, with culmination of all these structures, then they came Sterlite case. Again, it went up to division bench, Supreme Court, and in Sterlite Industries case, a innovative scheme was introduced whereby shareholders were actually being squeezed out of through a scheme of arrangement where the company said that the shareholders are offered a check. If the check is in cash, the concept of negative consent, if the check is in cash, they stand exited from the company, and share capital stands accordingly reduced, and therefore this was a buyback routed through a scheme of arrangement in Sterlite's case, and that's how thereafter we saw regional director and ROC opposing it to the nail in the courts, and now we see under the new section 230 to 32 that buyback is still prohibited. Buyback cannot be routed through a scheme of arrangement. However, they have allowed squeezing out minority shareholders by way of an offer, which we will come and see. So all in all, what I say is that innovative things like consolidation of authorized capital, change of registered office, reduction of capital, change of name, alteration of object clause, all were tried and tested in the High Court, and they were blessed. And now the entire controversy whether you can do certain things through a scheme is now settled, and you find that in some form or the other in section 230, 32, 33. Coming to the issue of NCLT and the theme which is given, restructuring the role of NCLT and other regulators, value creation or otherwise. First point, yesterday I was reading a news report, Mint has reported that there is a report, Alvarez and Marshall, there are 25,000 cases pending currently before various forums. So I want to just highlight this fact that there are 4,000 pending cases in company law court. Then there are around 700 pending cases at BIFR. Then there are around 5,200 winding up and amalgamation cases in the High Court and 15,000 cases in DRT. With 62 judicial and technical members with only 11 benches. Now it is anybody's guess how the justice will be sort of delivered with these constraints once the transfer notifications are passed by the respective regulatory authorities. Though the scheme of the Act from 230 to 240 sections with the rules, amalgamation rules, provide timelines, strict timelines to complete these restructuring through court orders and mergers and amalgamation. However, it is anybody's guess how much time actually will be required or taken by the companies, by the NCL. With that, since morning you must have been, of course, going through this exercise as to why, what, when, but still, for the sake of repetition, let us see what is corporate restructuring definition in the perspective. The essence of corporate restructuring lies in achieving the long run goal of wealth maximization. That's the key. So what is defined as corporate restructuring is the corporate management term for the act of partially dismantling and reorganizing. So it could be split, it could be demerger, it could be division, it could be amalgamation, any kind of legal ownership, operational or other structures of a company for the purposes of making it more profitable. That is the theme. Value creation or survival. That is the goal and the objective of corporate restructuring. First, this title when I came, I read this and I said this can be interpreted in two ways. One is for the companies and clients, and one for professionals like us in the current scenario. Then you have, which includes mergers, consolidations, divestitures, buyouts, sellouts, demergers, all a gamut of the restructuring exercises which can be done under a corporate restructuring. So this broadly encompasses two distinct groups. One is business restructuring, which includes expansions, including mergers and consolidations, tender offers, joint ventures and acquisitions. Basically to garner control, market share, consumer share in the market through inorganic means, not by organic means. Then there is contraction, including sell-offs, spin-offs, equity carve-outs, abandonment of assets and liquidation. So there what you do is downsizing and upsizing. Downsizing will reduce the size of the company and you can better manage. Then there is a second part which is financial restructuring, which is value engineering, either subsidiarization or desubsidiarization. What? Ownership and control, including the market for control, corporate control, share buyback program, exchange offers, and from public going to private companies. So all these 2-3 factors, if you see, first business restructuring, then financial restructuring, all part of the same. What are the key sources of value creation? So the first and foremost is company or the business should be profitable, growth oriented. So fast growing business, if it is acquired by a competitor in the market, it is and even if the acquisition price is higher, at times it adds value to your size and dominance in the market, and therefore could be beneficial to the company or the corporate for a longer run. Consolidation and creation of synergies. Now, consolidation of an established industry by organic market share gains. Concentration through acquisition. So I gave you the examples of Swaraj Paul, I gave you the example of RP Goenka Group, CEAT and all other companies which were acquired, and inorganically, in an inorganic way, they started building the size and thereby controlling the market share. Then corporate recoveries. So you have business which is not profitable, and there are issues on receivables, there are issues on sales, there are issues on employees, there are issues on cost factors, cost centers. So you do recovery or you do rationalization. That is one of the other key growth or value creator source. Then you have managing cyclical businesses by counter-cycling. So there are seasonal businesses, crop business, or there are weather related businesses. So you do a strategy which can create, you do a cyclical businesses by entering and leaving periodically. So you have a growth horizon of 1 year, 2 years, make profit and exit at the right time. Or long-term management where you have a horizon of 5 years, 10 years, 11 years, and then you see that you have recovered everything and you exit at the right time. So, but it is cyclical businesses, entering and leaving at a crucial point in time. Sometimes it can be very, it can prove otherwise also if the timing is wrong. If your entry time and exit time is not correct, then it can cause loss of value. Then active and prudent management of your business portfolios. Managing portfolios of businesses or geographies and ensuring they evolve over time. So you have the growth horizon of let's say 6 to 12 months in some cases, you make profits and you exit, or you have a horizon of 15 to 20 years long-term growth, and then you stay put and keep rationalizing and keep reorganizing your business to achieve a scale or a size and dominant market share in the segment. With this, I will come to now these busy slides, which are actually what is the role of NCLT in all doing this, what we are talking about, the concepts on valuation, on mergers, amalgamation. So most of you are aware as to how things work and how it used to work in the High Court. This gives a, as I said, and because I was setting up a background earlier, law is now settled more or less. By NCLT, they have actually standardized the process, and they have said that how will a petition will look, what all information is required, at what point in time you have to make disclosures, all those issues which were open and were subject to judicial scrutiny and through the evolvement of jurisprudence for last 20 odd years in the High Courts, is all now encompassed in sections 230 to 240, read with the amalgamation rules and reduction rules in a very standardized and a very lucid form. So NCLT will not be burdened, hopefully, with the interpretational issues of whether you can do certain things, you can't do certain things, what is the reading of so and so, because everything is now settled and provided in the form of a standardized formats. And therefore, and second thing is that now they have allowed even professionals like chartered accountants and company secretaries, in addition to lawyers, to make presentations and appear before them. So it is a mega tribunal. Corporate jurisdiction is now consolidated into one forum. Jurisdiction of High Court, CLB, BIFR, AIFR, all consolidated and all taken away and put it into NCLT. Bankruptcy resolution jurisdiction under Bankruptcy Code is also conferred on NCLT. 11 benches, 2 in Delhi, 1 each in Ahmedabad, Delaware, Bangalore, Chandigarh, Chennai, Guwahati, Kolkata and Mumbai. Civil Court will not have jurisdiction on any of the issues which are tried by the NCLT. There will be mixture of equitable and legal discharge of justice. This is very important. You see, in court of law, the lawyers argue in a different format, the pleadings are different. In NCLT, it is going to be more on equitable justice. If you have made full disclosures in accordance with the rules, in accordance with the sections, and the authorities are satisfied, they are not raising any technical issues or objections, then NCLT on a macro level, on an overall basis, will bless the transaction and say that so long as you have disclosed everything, so long as you have been transparent and you have complied with everything with the self-disclosure. In fact, if you see the entire scheme of the Companies Act, and I keep repeating this, if you see the entire scheme of the Companies Act as also the SEBI NODR is disclosure oriented. Self-disclosure, self-regulation oriented. So therefore they have a concept of key managerial personnel, making them responsible and accountable for certifications and for making statements in respect of the company's businesses at various points in time and taking it on record. And that's how the law is evolving, and it is going to develop in the next few years and will come up to the level of the global standards on transparency and disclosures. Therefore they have provided stringent penalties. And you must be aware that section 447 and 448 of the Companies Act that deals with fraud. And one of the sections 448 says that if you do not disclose a material information or a fact, or you suppress material information though you know that is required to disclose to the authorities, or you concoct information or you misrepresent and it is found later on that it was false, it was not true, and that there was a suppression, it will be deemed to be a fraud, including the affidavits made before the NCLT and all other authorities under Companies Act. So mindful of the fact that they have all the powers and all the wherewithal to sort of come up to you and say that certain things were not done as were required to be done. It is not only the straight line jacket customized thing, the requirement which was given in the rule. Somebody might just wake up and say that the false statement was made. Now you can't prove that the statement was correct. You are guilty of fraud. Then serious fraud offense, all the issues arise. So you, as professionals, one has to be extremely careful.